But first, we start off with Rockin' Retail, the group of stocks on track for their best quarter in 6 years. And check out some of the biggest winners this year. Ulta Beauty, Best Buy, Target, TJ Maxx, Costco, all surging double digits. Is this the face of a slipping consumer confidence? Recession fears continuing to weigh in the minds of consumers, and GDP growth below 3% in 2018, we found out today. So can the retail rally rage on in this environment? Are there any bargains out there, Guy?
Well, as long as and welcome back. We miss you when you're not here. Honest to God.
No, I'm glad to be back.
No, Brian was here, and right, we had Scott. Scott was sick yesterday.
Double.
It's great. It feels like a warm blanket when you're back.
Aww.
What was the question? I know. I'm kidding. That's a joke. So can the retail rally continue? Yes, one thing I've learned over the years is never underestimate the U.S. consumers want to spend. As long as the market's okay, which it now has been for the last couple months, U.S. consumer feels good about things, they will spend. In my opinion, it doesn't mean they should be spending. We have a conversation on whether or not they're in a situation where they should be levering as much as they are, but they will spend. Want to trade? Look at what Dollar Gen did about a week and a half ago. The report, it was a pretty disappointing quarter. The stock went down about 10.5%, 11% in a straight line. Now it's right back to those levels. Fair valuation. The stock is telling you something. Feels like it wants to break out. And 2 days after earnings, you had a couple of analyst upgrades. So when you see bad price action, but then great price action on the back of a spotty quarter, that to me is a tell. I think that goes higher.
What's your sense of discretionary at this point, Phil?
I think you got to like retail. So you can make the case right now, Melissa, that the consumer has never been as healthy as they are right now. And why is that? So there's three things, right? First is the wealth effect. The stock market's gone up, but I think there's some holes in that actually because not everyone has a stock portfolio. But the other thing that's important to remember, and if you could pull the chart up, I brought along a chart with me. Debt service. So this is a huge difference from prior cycles. Debt service or debt payments as a percentage of disposable income, look where it is. Lowest level since 1980, right? And look where it was at the end of the prior cycle.
Is that primarily because people have delevered or because interest rates are so low?
So the big one was the deleveraging, right? But also, I mean, with the exception of a couple of times, the 10-year Treasury, Melissa, has been between 2% and 3% for the past 8 years.
Right.
So, and the Fed, by the way, just said we're done hiking rates. So the consumers have delevered, and debt service costs are very, very low. And that's also a major tenet into the sustainability of the economy, because 70% of the U.S. economy is the consumer that Guy just mentioned.
How does this translate into what you buy, Pete?
Yeah, well, what I've been buying is anything that I find where they've got serious growth. They've also got a dividend yield, so it actually is anywhere close to where the 10-year is right now. If it's close or bigger, I look at these companies and I'm like, hey, if you got growth, you've got that, and the fundamental story is there. I'll give you a great example. Target trades at 14 times, gives you a nice dividend yield. They're a buyback king, and the stock has gone from $69 to $81 in a very short period of time, and it's still too cheap, in my opinion. I think there are ones that are a little bit overpriced, a little expensive. I think Walmart, for instance, I thought it got in front of itself. It got up towards $100. You look at the multiple of those two different stocks, completely different, and margins are different. So, we compare those all the time, but you look at PVH last night, great numbers, great growth. They've got everything going for them. That trades at like a 13 PE. So there are companies out there that are not trading at this inflated area, and they still have growth, and they're delivering the numbers.
Well, here's the thing. If you're looking at retail stocks and what they're doing in the Q1 of 2019, and you're saying that this is a healthy environment for the retail, for our consumer, I think you're doing it wrong. I mean, listen, you just mentioned Target. It was trading at $88 at the end of Q3 in 2018. It went all the way down to $60 in December.